rising global liquidity doesn't always impact crypto prices instantly. It often takes time for the money to move through the system and reach risk-on assets. How long, you may wonder? Well, if we take a chart of the global money supply and Bitcoin as a representation of the crypto market and shift the liquidity line forward, we can see something interesting. The best alignment happens when global liquidity is moved about 3 months ahead. In other words, global money supply tends to lead cryptos by around 3 months. And if that pattern holds today, it suggests we could see a crypto bottom sometime in early April before a multi-week rally. But this only tells us about the next few weeks. So how long can this rising tide actually last? And more importantly, when is it likely to go out? That's where this next chart comes in. It tracks global liquidity levels in advanced economies, going all the way back to the 1970s. The way this works is it puts global liquidity on a scale from 0 to 100, with higher readings, meaning looser financial conditions, and lower ones signaling tighter ones. And just like crypto, this chart also moves in cycles. If we measure the time between two lows, so one full cycle, it averages about 65 months or roughly 5.5 years. Now here's the important part. In each cycle, liquidity typically rises for about half that time, so 33 months, before turning lower for the second half. So this gives us a useful roadmap. The last major global liquidity bottom came in around December 2022. If we add 33 months to that, we land in September of 2025. So if this cycle continues to follow its historical pattern, global liquidity could keep rising for another 6 months. That would basically mean more support for risk assets like crypto, until the global liquidity cycle peaks and starts heading lower for a 33-month decline until mid-2028. So our big call for this crypto cycle is that the bull market is going to be much more steady than most people think. We're not going to be experiencing the typical pump and dump behavior anymore. Institutional money is flowing in Bitcoin, and while we think that is going to make Bitcoin continue moving higher over the coming years, it is also going to make it a lot more steady than what it has been in the past. So it could be that Bitcoin keeps up this aggressive trend going throughout 2025 and then slows down a bit. What's certain is that we think this dip is a buying opportunity for Bitcoin. We're not ruling out a little more short-term pain down to the 70,000 support level as uncertainty around tariffs stays high, but we expect it to recover quite quickly to its all-time highs once uncertainty clears up, and when that move comes, it's usually very fast. Most traders wait until it's obvious, and by then, the bulk of the rally is already over. Which is exactly why we created our Bravos Research Digital Assets membership. Inside, we share live crypto trade alerts, market updates, and educational breakdowns.